Hey, this is the Prophet with Nick Black. It's time to chit chat. You know nothing about blockchain. We here to fix that. You want the news on the news.
What's going on, Money Morning Live? It was nice spending some time with Brian King, but it's time that we start talking about cryptocurrencies with our friend Nick Black. Let's bring him in 5, 4, 3, 2.
Le pew, le pew, le pew, le pew. What kind of pew is that, Eric?
Pepe Le Pew, man. You're changing it up. You're flipping the script on us, Nick.
It wasn't Pepe Le Pew, but it was French.
Yeah,
I mean,
well,
I guess you're not wrong.
No, I'm not.
You're not wrong. You're not right.
You know what that makes me right, Nick? Not wrong.
Nope.
Makes
Sometimes
me right.
you can be so not wrong that you're wronger than wrong. I think the title for today should be wronger than wrong.
Wronger than wrong.
Can you be wronger than wrong?
You could be more wrong than wrong.
Today, so welcome to Alternative Wealth Daily Live. We are going to do a bunch of interesting stuff today, including we will try to get to your questions if we don't ramble on incoherently. We will do our market update. We're going to take a closer look at looks because they did some interesting things. They initiated the pounder. For any of you that know what the pounder is, it's a new increase daily looks staking reward emission thing, and I'll explain to you how that works. So that's kind of cool. So the rewards on the looks token. Now there's other things that happen. We'll explain all of it, but two or three things are happening, so you need to know all of that stuff. Okay, we're going to talk our main focus today, wronger than wrong. It's about Web3, what Web3 is and what Web3 isn't, because everybody's at the cooler. Web3's coming. Web3. And not many people know what Web3 is, and no one on CNBC knows what Web3 is. They don't even know what Web2 is. They don't know what much is, but that's fine. We're going to clarify all that, so we'll know what that is. We're going to talk a little bit. Some of your questions pertain to some interesting things. So, we banged around a little bit, and, we'll talk about markets and all this kind of cool stuff. So, Eric, you're traveling, are you not?
I am traveling. Right now, I'm at the Money Morning Live offices in Baltimore, so it's kind of cool. We're on a virtual setup, doing it very differently. A little bit more difficult, but still a lot of fun. It's nice to see everyone. Wish you were here, Nick. Maybe one day we'll be able to meet in person.
Yeah. Wish you were here. He says once he's already there. No, ain't nobody saying wish you were here before it happens.
I don't make the invites, man.
I will be at the conference in May, though.
That's nice. Not sure that I will.
That'll be fun.
Sounds like a fun thing.
Wish you were here. Wish you were here.
I know. So, Nick, we're going to be looking at, what do we start now with here? A market update?
Let's go look at the markets because, yes, there was it wasn't CPI, it was PCE today that came out. I'm not going to step on anyone else's toes. There's a lot of people. I think if you really want to kind of dig into these kinds of things, Garrett is one of my favorites to go to. When he digs into numbers, inflation, oil, things like that, I really like what he has to say. So I'm going to leave the bulk of the PCE and consumers index and pricing and stuff like that for Garrett. However, I will say this. When you dismantle these numbers, the Fed likes the PC. Listen, the Fed likes anything that's intangible. The Fed likes anything where you can't falsify it, where it's so vague that they go, see what we mean? Like, what are you talking about? So the Fed likes vagaries. Just understand that. We're not going to too much talk about inflation. However, there are still a big giant chunk of people that believe that you should own Bitcoin because inflation. Well, you may want to own Bitcoin because hyperinflation, but when prices go up and prices go down, as we all know, that doesn't mean inflation, does it? Prices can go up. For instance, Eric, you ate an expensive steak last night, did you not?
It was not a steak, but it was delicious.
What was it?
I had some lamb. I had some bison.
Oh, fancy pants.
Yes.
I'm sorry, you had
steak.
You had lamb and bison?
Yes. It was delightful.
Oh, right. I said, yeah, I like how you come back. Oh, hey, you had some steak. You're like, I didn't have steak.
It sounds like you're a little bitter that you weren't at the dinner, Nick.
Lamb and bison. Let me guess, was it fed to you while people like waved palm fronds at you and fed you grapes one by one?
Essentially, it was fed to me. The service was fantastic. Yes, it was nice.
Okay, so yeah, and those were probably not cheap. I don't know what lamb and bison are. I don't think I've ever had either of those two, and I've definitely never had them both. Has anyone in the chat had both lamb and bison on the same day? Be honest. And in nature, that couldn't even occur. Even if you were like an angry wildebeest or a tiger, no one could make that happen unless you attack a zoo. That's the only way.
Living the high life over here, man. Taking advantage while I can, right?
You literally had to have forces of human nature and technology to put that possible pairing together. But good for you.
You know what, Nick? I was watching looks tokens go crazy last night. I'm like, look, we're going for a nice dinner tonight. These looks are jumping.
That's true. There's a bison lamb burger. Gross. That's where I draw the line. Well, look, the prices of the bison and lamb that you had last night were probably not the same price as the whatever the consumer price index has for meat substitute, right? Prices can be high based on quality. Prices can be low based on quality and things like that. Don't be part of the cohort of the Bitcoin owners that own Bitcoin because they think prices going up or prices going down equals inflation. Matter of fact, don't own something because inflation unless it's tips, right? The inflation protected securities. So, and even then you're gambling because you're getting paid back in the dollars that could be debased. So I think it's best to frame Bitcoin as this is an asset that tends to perform well when there's bad behavior in the rest of the world. If you believe there's bad behavior, which I feel like there is, then you should own some Bitcoin. But don't peg it to things. Don't peg it to PCE. Don't peg it to inflation. Because that's a nebulous figure. Don't peg it to consumer prices or car prices or energy prices, things that are very weird and sometimes not as, and sometimes inelastic. Okay, but as a store of value, as a chunk of currency or just as a chunk of value that's antithetical to bad behavior, I think that makes sense. And I think about 25 to 30% of your portfolio also makes sense. That's what I've kind of held statistically kind of in my portfolio. Although right now I'm overweight in some of the layer ones that I believe are going to rebuild what we're going to talk about today, Web3. The layer ones, if you're thinking like, what is a layer one? Well, layer 0 is the internet, right? Layer 1, these are the first layers that go over the top of that. And you would think Ethereum, Cardano, Polkadot, Near, to an extent, Matic is starting to move from being a layer 2, which just modified Ethereum, to becoming its own layer 1. It is starting, I know you're seeing articles, I don't know if you are too, Eric, but I'm seeing a lot of articles about Matic, about Polygon, about them trying to really define themselves as a layer 1. So cool. I would love that because, maybe there'd be some kind of pent up value there that we haven't unlocked. Great. For those of you that use Nexo, Nexo is now using Matic to transfer Ethereum stablecoins, meaning you can do nearly free transactions like back and forth to Ethereum wallets in between Nexo and Ethereum wallets. You say, well, who cares? Well, because, last year at the height of all the craziness, some Ethereum transactions were hundreds of dollars. Like to move $100, there was a point where it cost $300 in Ethereum. Pew, pew. That one's not even through the mouth. That one's right here. It's just like catch the eyeball on the way back.
Doesn't sound like it's worth it there.
Yeah, well, it's not. And the problem is, as the NFT space, as you know, sometimes you get in to buy an asset. Like I bought a Snuggle Buddy yesterday. It sounds silly, but they're these NFT, these furry, real cool looking, creepy, furry creatures. And they're real cool. And they're also hand done. They're not like the ones where they just spin out trillions of them. The designer, this guy Dino, he's an artist and he made 500 one by one. And I was like, that's cool. And it reminds me of like when I was a little kid and I had like a little stuffed doll, but an eye was missing. And I was like, he's cooler because his eye is missing. And my mom was like, you're weird and stop playing with the Ouija board. And I was like, well, stop drinking gin at 4 p.m. So anyway, like there was a lot of back and forth, right? Long story short is I was using Ethereum and I was watching for the fees to like go down. I tried to catch it. It was still like $40 to do an Ethereum transaction. I'm like, man, this just doesn't feel like we're there yet. Well, we're not there yet. So there we go. So anyway, if you have a lot of exposure to layer ones, I think you have a lot of exposure to what we're going to talk about today, which is Web3. So I'm not going to go into the individual ones. I do think Near belongs on the list. Cosmos definitely belongs on the list, which was why it was so weird that Grayscale did not include it in their fund. It's literally called fund. Well, we'll talk Grayscale a little bit. Obviously, they're probably going to go to battle. I think we talked a little bit about this on Tuesday, but it looks like they're probably going to sue the SEC if the SEC doesn't allow the rule change to allow Grayscale to roll their trust into an ETF, a spot settled ETF. And there's a lot of reasons why that would be great, and there's a lot of reasons why that would be weird. However, just real quick about Grayscale, for those of you in GBTC, for your Bitcoin exposure, it is trading at a huge discount right now because, again, the way Grayscale works is BTC goes in the back of Grayscale, shares come out the front of Grayscale, but it doesn't go the other way. Like, you can't exit the shares and get Bitcoin. You can sell the shares, take a tax hit or loss, and buy Bitcoin. But when Bitcoin goes into GBTC, it doesn't spit out the other end. Shares come out the other end, and shares are traded. And when you have traders, you have kind of a second market. So you have the price of Bitcoin, and then you have the price of GBTC, and they don't always communicate necessarily. There's some kind of causal relationship, but it's vague because right now I think Grayscale trades at a 27% 27% discount to the native asset value if you went the other way. However, you don't know what's going to happen if they unwind that fund, and there's an unwind period. So you can't just go, we're a trust today, and tomorrow at noon we will be an ETF. They have to give everybody fair notice. People have to have the ability to exit. People may not want to be in that ETF. So when this happens, there'll be some wind down period, and they will communicate to everyone, hey, this is how you exit if you don't want to be around. And in that period, you can expect that the price of Bitcoin, if they allow the rule change that would allow a spot settled ETF, that's so big for Bitcoin as far as real institutional money, which we don't quite have yet. We kind of have hedgy money, but the insti money is not here yet. But it's so big for institutional connection to the Bitcoin market that it's a good chance that probably Bitcoin has a great couple of days, weeks, or months immediately after that rule change goes into effect. And so I think any price variance, you would definitely get the benefit, I think. However, we don't know how they're going to reprice. We don't know how they're going to connect. For instance, it doesn't have to be a one-to-one transition. If the price of the shares is X, they might do shares in terms of the new shares versus shares in terms of Bitcoin. So until we know how they're going to unwind that, I would not assume that owning GBTC at a discount to NAV is actually owning Bitcoin at a 25 to 30% discount, because I don't think it's that simple. There's a lot more. There's a lot of gears. Okay. So there's my little sermon on GBTC. Some things that I think are interesting to look at. One is starting to climb back up. I think for those of you that have been hopefully adding this, it's a good layer 2, even though it's called 1. I like it. They're getting into a lot of the DeFi, the good parts of decentralized finance. I don't want to call it DeFi because DeFi is kind of spammy and gross, but some of the decentralized financial products like lending, blockchain-based lending and collateralization, I really like, and One is digging into that pretty heavy. So that's something to pay attention to. I think it's worthy of our eyeballs, and I like it. It's low market cap for what I think it is. I think it's very comparable to Matic. See if I can get Matic. So Matic's market cap's 12 point. Let's call it 13 billion, and we got and we're at 2 billion. So is One? Does it have the exposure to the world that Matic does? No. Wherein lies some opportunity. So I would put that in the back of your mind as a potential opportunity if One really focuses on that under collateralized lending market. I think there's a lot of money there. So that thing could be an easy 4 or 5x. That thing's probably an easy dollar token in a more positive environment, which I think we're still kind of in the doldrums in this market. Even though the last couple of weeks have been bullish, we're still in the trenches, so to speak. Okay, I did that without profanity. I'm very proud of myself. All right, some other things that are interesting. I thought audio has been catching a bid lately. You know, audio trades on news. There is not a lot of real use, utility, or adoption of it. The biggest piece of news last year was that they hooked up a deal with TikTok, but TikTok people aren't buying stuff on audio. TikTokers are not buying anything. They're certainly not buying audio tokens. So I think it's a little bit weak. I think it's more headline chasing. I don't know where audio goes. I like the idea of having exposure to decentralized, like a Spotify that's decentralized. I think that's really cool. I just don't know if it's a better mousetrap. Okay. Render is very interesting. It's just that I think Render will get out-rendered by NewNet. The team at Render, they're really cool. They're hip. Beeple is on their board. AJ Abrams is on their board, or JJ Abrams on their board, which is really sweet, except who cares? Because those dudes aren't building businesses. And it's like, okay, oh, Chamath came on CNBC and talked about Render, how awesome it was, a disruptor. He said it 14 times, disruptor. Whoa. Every time Chamath says disruptor, people look and go, wow, I should invest in that. You know who else looks? The SEC. These SPACs are going to get nuked with litigation. Just wait. You just wait. Anyway, the other thing that I thought was interesting, NewNet, I'm looking at an entry point. Basically, what I'm looking at doing is taking some of my profit from Render and pushing it into NewNet, which I think is a better version of what Render would like to do. I think Render's way too narrow, but it's just got some trendy people involved. Okay, we're going to talk a little bit about looks because there's some interesting things that happen with looks. So, and Eric and I were just talking. There's this new thing called Compounder. Eric, do you know what this is?
Well, I know what it is because you just explained it to me, Nick, but it's really exciting, especially for someone like me who's a holder and staker of looks. It's driving up the prices. If people haven't noticed, it jumped up to $2.91, I believe it was last night, Nick. I missed it. Possibly would have sold out on that point, but yeah, this is great, in my opinion.
So, okay, so let's explain what Looks is. Looks Rare is an NFT exchange competing with OpenSea, Rarible, and some of these other ones. Have you used Looks Rare to actually do any transactions, Eric?
Yeah, I've done, well, yes, I have. 1 or 2 purchases I did on Looks Rare. I listed things on Looks Rare, but they didn't sell because it doesn't have the volume that OpenSea has. OpenSea right now is the go-to, although it's far inferior, in my opinion, to Looks Rare. It's just people haven't made that switch yet. I feel like everyone has to make it at the same time. All invest in it.
I think so too. I think they're slowly grabbing people, right? Mm-hmm. They're slowly, because you do a transaction on Looks Rare and you go, this is so nice. They even initiated a function now where you can launch NFT projects on Looks Rare. You have a live chat where you can chat with support personnel at Looks Rare when you think you've fat thumbed something or something doesn't look right, and they get right on it. And like all the things that they should have done at OpenSea forever, and they don't care. OpenSea doesn't care.
Right.
And they don't care about you. They don't care about the people involved. Their corporate structure is gross, and they don't care. Nothing that OpenSea does is for you. It's for them. This is a more open source project, Looks Rare, and there's basically a bunch of NFT traders, designers, and software devs that said, OpenSea sucks, bro. Why don't we do a better version? So that's what this is. So the way they incentivized participation was they said, hey, we got this token that we will give you if you've done a certain amount of transactions over a certain amount of time. Now, you can stake the token, and not only will we give you more tokens, but we will give you a percentage of the wrapped Ethereum that the platform generates in fees. So the fees they give back to the investors, to the people holding, not only if you're holding the coin, but if you're doing transactions on Looks Rare, you're buying NFTs, selling them, creating NFT collections, which you can now do. They pay you for the transactions. Like you get paid in the transactions in Looks tokens. So they allow staking of the Looks token additionally, where you can stake it and earn, and I will show you what that looks like. There's two different ways you can earn. This is the first one, which is regular staking. You stake it and you earn both more Lux tokens and you earn wrapped Ethereum in real time. So look, I've earned $139 worth of wrapped Ethereum since yesterday. Great, good for me. And I've earned a few tokens. That's cool.
Nick is rich.
And not rich. What's rich, right? But the APR on the token itself is 62.75%. Now there's an asterisk here. That's going to change on May 10th or 11th. Okay. They're cutting the rewards in half. They do this because they're giving the rewards away for free. And so they have to make the tokens last. So they're cutting the reward in half, and then it's going to last like that for a period of 6 months. They're going to cut it in half again. It's going to last for another 12 months like that. So it gets cut in half. It got cut in half on February 10th, where these numbers were much, much higher. Okay. And the wrapped Ethereum rewards, which is even more interesting, is 87.15%, which is pretty cool. And yes, it was very, very, very cheap a few weeks ago. Michael from Maine, it was under $1 a few weeks ago. And I was like, well, maybe it broke. Maybe this thing just collapsed. However, they made some adjustments. There is a second kind of staking, which is called the Lux Compounder, which affectionately called Pounder. I would urge you not to call it that, lest you be canceled or vilified by your peers. But what the Compounder gives you is they take the wrapped Ethereum and basically as you earn it, they convert it to Lux tokens. It's because some people were already doing that. Some people were taking the Lux tokens. Some people were taking the wrapped Ethereum they were earning, transferring it to their MetaMask account, swapping into Lux tokens, and staking the new Lux tokens, which is transactions. That's costing you $50 to $100 in Ethereum. So now what they're doing is they're saying, listen, why don't you just take the wrapped Ethereum and just swap it right into more Lux tokens? Well, if you are super bullish Lux tokens, that makes sense. Because you're like, if I'm doing that anyway, I'd rather them do it. The daily estimated compounds, it's 1,170 times a day. Ding, 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 ding. So every 30 seconds. So yeah, more than that. Many times, right? Like 50 times an hour. So for every 45 seconds, let's say 45 to 50 seconds, they're doing this compounding. And if you're a Lux token staker for life, Lux for life, bro, then it makes sense. If you're like me, it doesn't quite make sense. Now, the total reward ends up being 289%, which is dope, except that they're going to readjust these levels. And so Eric and I were getting into the game theory. So Eric, let's walk people through kind of what we were talking about.
Let's do it.
So on or about the 10th or the 11th of May, they're adjusting the rewards down. On February 10th, they did their first adjustment. The rewards used to be close to 1,000%.
Wish I was in it then.
And then they went, and then remember what happened a few days after they cut the reward. Where did the rewards go to?
The rewards went down to, they went down to like 200%.
200%, where they sustained for a while. And then the problem is the token got nuked. This is why we were telling you over and over, do not buy before the cut. Do not buy until they readjust. We don't know what the price is going to be. You will get paid to wait. The longer you waited, the more you got paid, because as you guys saw, the token went down to 91 or 89 cents.
Yeah, I did not wait that long.
I did not either. But I continued to add. So yes. I continued to add. What I should have done is probably sold some of my Lux tokens in advance and prepare for the repricing. When they're going to cut the reward in half, obviously people's motivation is not going to be where it was. So right. I think this compounder thing is them trying to front run this next rewards cut. Because if you know the reward's going to get cut, it's more than half. It's like into a third. If you know this is going to happen and you don't own Lux tokens right now, I don't think you buy Lux tokens. Not right now. What do you think, Eric?
I don't know. I hear rumblings that $4 is a nice point of control for Lux tokens.
Why though? Why?
I guess from previous selling, I don't even, to be honest with you, understand that kind of stuff. But that's just the word in the street. I know for me,
They
I know
they don't either. They don't
don't
either.
either. Okay.
No.
Well, thank you then, Nick. But I do know, I know what my average entry was of everything that I got into. I'm taking that, knowing what I'm in it for, knowing that staking is over in about, or getting, nulled in about 6 weeks, reduced. So I'm trying to figure out where the point is where I want to make a profit, take some out, but really keep it safe as well. Because I don't want it to drop back down to 90 cents where I lose, where I'm down 70% on everything that I put in.
So here's the way. So as Eric told you guys last night, the price got up to 291 for a second, for a skosh. So I exited all of my original position except for the profit. The only thing that I kept in looks was the profit, because as we get closer and closer to that date, to the date of repricing these rewards, which is the 10th or the 11th of May, other people are going to front run this. We've already seen what happens when they cut the reward. The price of the token gets nuked. And some people will say, no, that's because all the people that were wash trading went away. And no, that's because this, because that. Yeah. All we know is for a fact that when they cut the reward last time, the token got decimated. It went from a high 2 weeks before of $7 and almost $8, and it touched 3 weeks later under $1. Under. So that's a lot. And I would just urge people, maybe don't give it all back. So as we get mid-April, late April, I exited last night, but I would be looking for a place to exit your original investment and just keep the profit running. And that way you have no emotional connection to this investment. You can win and be happy and smile. Later on, maybe the coin goes to 8. Maybe it goes to $8 trillion. We don't know, right? What we do know is what happened last time. It got decimated, faces melted, done.
All right, so then, Nick, let's say it does get decimated. Let's say that Looks token goes down to 75 cents after the staking drops. Do you then after, because you sold all your initial investment, do you take some of that again and do you reinvest, or do you have to kind of feel out what's going on, what the team is doing? You kind of have to see where it is at the point.
You got to do your 5 T's again. And then on the tokenomics part of it, you have to see if the reward makes sense. For instance, if they're onboarding more people to the platform, if the amount of transactions in daily volume is increasing, yes. If it's flat or decreasing, I think you have some hard questions to ask, because at a certain point, you can only love and hope. I mean, the cheaper it gets, the more enticing it gets. But on the other side, if a coin gets below 40 or 50 cents, then people go away from it and go, well, maybe this it's going to completely die. And then you're gambling.
Yeah, makes sense.
So you would have to see a lot of things be consistent daily volume, consistent wrapped ETH. I mean, I look at it as Ethereum mining on the cheap. And so you might do it for the sake of that. You might be getting, here's what I think is going to happen. I think this 150% that we see right now is going to look a lot more like 30% or 40%. And that's not as enticing because you're getting that. Look, at Singularity DAO, each quarter, I mean, again, this is a random example of where you could put money to better use. I could take that same, if I was thinking of Ethereum mining, well, I'm Ethereum mining, 16.6% a quarter with Singularity DAO, like in their Dynaset. So think about that. So there's already 64%-ish a year, plus that's compounding. So now we're getting close to 80-90% a year just in the outperformance of the Dynaset for Ethereum versus Ethereum. Well, that's another way to mine Ethereum. That's always the way I've framed the Looks token, is it's a great way to mine Ethereum. So that becomes, to me, the deciding factor. And if this thing gets nuked down to 20-30%, it's not exciting to me anymore, based on the amount of risk of being on a platform that we hope makes it, but we just don't know.
Yeah, because even though we both feel it's a superior platform and is a better service, doesn't mean it's going to be able to beat out something that already has all those people. So nice explanation there, Nick.
I mean,
yeah,
it's just tricky. I mean, what are you going to do, Eric? Are you going to look? Are you going to how are you going to play it?
I mean, I'm going to try and exit when I'm already in the profit right now, and I wasn't for a while. So I was really nervous when Looks went down to 90 cents. Not text Nick nervous, but nervous. And but so it's up here again. I'm feeling good. I'm trying to. It's tough because you don't know where it's going to go. So you try and feel it out and figure, can I make a little more before I exit? But I really like your idea of taking out the initial investment, leaving in there, what's left over, and then if it pops, you make some side money and you don't really have to worry about it. So I think that's a good plan. I think it's probably the safest and the smartest plan, at least. But yeah, 30% is still 30%, which is good, but it's not compared to 200%. It's not as exciting.
Yeah. Well, it's not compared to 33%, right? Like you're just trying to balance between grinding out some yield and what is the safest way to do it. And I just think, there's a lot of what ifs with a platform like this, and it could go really well and you get rewarded for it, and you could get nuked. Yeah. And then you would not get rewarded for it. And that would be bad.
Now, one thing that I really like, if you could scroll up, Nick, and show the two different types of staking, I really like the staking that I'm in right now, the initial staking, because, we don't know what's going to happen with the looks token. You'll get a higher percentage if you do all looks and the double compounding. But with the regular staking, at least I'm making some Ethereum that I know is a much more stable coin. So even though I'm receiving less, I know that's in my back pocket. That's there to kind of protect me from completely crashing and burning it if something goes wrong. So for me, I wouldn't use this one right here, this top one. I would stay with the bottom one. I'd go with regular look staking and be happy with it. It's been really good. It's been good to me.
While we've been talking about it, I made $7. That's
what happens when you have 150 million in there into looks tokens, Nick.
No, you can see it. I have 28,021.94.
I'm just kidding. Yes, it's great. It's nice. It's actually fun to watch because of how quickly it accumulates. I wish I was in there when you started talking about it months ago at the 1,000%. If only, right?
We used to do, when we first got into looks rare, we were staking. The staking rewards they were over 1,000%. You could hold your breath. We were having a competition, me and my buddy Leroy. How long you could hold your breath, how many dollars you could create while you held your breath. I think I got up to holding my breath for like $60 one time.
Wow. And what was that? 5 seconds?
Yeah. I can hold my breath for like almost 3 minutes when I practice.
Wow. That's crazy. That's the that's like, Marine in
that
you.
Sounds like one of those things kids say, like, I can run 40 miles an hour. You're like, okay, Timmy. No, I was in dive training, and part of it is training your lungs, and I got to where I could do about 3 minutes pretty consistently.
That's impressive, Nick.
Most people can do 1.5, 2 minutes with a little bit of training.
If you tape my mouth closed and my nose closed, I can hold my breath as long as I have to. All right, let's move on. We talked a lot about looks. Yeah, let's move on.
Okay, we should probably talk about, what Web3 is, and what Web3 isn't. And a lot of people, so you have some, so what do we got? We got a little artwork, do we not?
Of course we do. Where are we here? Yes, we have this right here, Nick. The history of the internet. And take us through what we're looking at here. It's got Web 1, Web 2, Web 3, and then for all you Wikipedia people, we have a little bit of a definition as well. But take us through this chart.
So the history of the internet, it started with, let's be honest. You had things you could look at, occasionally pictures. If you had the right kind of dial-up access, some grainy stuff would appear. You could send and receive email. There was people that were paying for email. You remember those days?
I mean, Kenny Glick just got rid of his AOL account like 3 months ago. I think he's been paying all these years.
You no longer have mail. Yeah. So that used to be it. It was simple. I mean, which was amazing because people, and I remember those early like morning chat shows were like, but Jim, why would I use something as silly as email when all I have to do is go buy paper, buy a stamp, buy a pen, buy an envelope, write all this stuff down on a letter, fold it up, put it in the envelope, put the stamp on there, put the address, go take it to the mailbox. So it's so easy to do that. Why would I ever send an email?
Email, so silly.
Dummies. People get it wrong. It's very tough to see what the future looks like, I think is we can sum that up. Okay, so the dummies had their way, but emails took over and stuck. Then we had this transition. So that was 1990, early 90s. Now we make our way into 2000. We have this informative, interactive, information-centric pop-ups, advertising. We had the onset of eBay and really cool marketplaces that were a lot more visceral. And you're like, okay, this is sweet. And then we had, we were 9 years away from Bitcoin. And then the idea that you could even have a web that didn't have all these gatekeepers, that you could have decentralized anything, disintermediated anything, private and secure, user-centric, internet experiences, or really kind of interweb experiences. And a lot came with that, right? And of course, Bitcoin didn't start out to break the internet. It started out to change the way peer-to-peer value transactions worked. But things morph, things change, because you don't determine as a designer what the use case is of something. You design something, and the people using it will determine what the use case is. Who knows what Velcro was designed for? But it just ended up on all of Eric's members-only shoes and jackets.
Of
Did
course,
it not?
it's fantastic. I love Velcro. Who doesn't?
And members-only.
Wait, do you still use snaps, Nick? Are you a snaps kind of guy?
Snaps? I don't even tie my shoelaces.
I don't either.
I'm not kidding.
I tie them once.
I set them. No, I don't tie them, period. That's too much stress on my foot.
Are you a flip-flop guy?
No, man. But I take them, I lace them up where they look real cool. I did this thing on YouTube, how to lace up cool looking shoes.
Yes.
And then I take the laces and I run them down underneath the insole, and that holds them in place. And I have symmetrical looking laces. People always say, whoa, how do you do that, bro? I'm like, whoa, hey, my eyes are up here, okay?
Maybe we should do a session on that. Are they loose though? Do they slip on and off? Like if you have to run away?
Man, it's great. If you have to run away, you probably will not do so well. But they look really cool, and
That's
so
more
people were like,
important.
"Man, right before he got mowed down by that truck, look how cool he looked with those shoes."
Fashion over function every day.
At the conference, I will do a shoe tying
Seminar.
People that want to have cool shoes, I'll do a thing about cool shoes at the conference. How about that? Cool.
Maybe we can
shoe
even
tying things.
We should get Money Morning Live Nick Black shoelaces, and you could run the seminar and teach people how to do it. That would be a great idea. I'm full of ideas.
I have a buddy of mine, Danny. Danny is like the king of like debt consolidation. He's like, if you got debt problems, you go Danny, right? Danny's like, one time I was looking at his shoes are always so freaking clean. I said, Danny, what's up with the clean shoes? He goes, bro, you have to wear white shoes with clean laces. People respect that because they know how hard it is to keep shoes white and keep laces clean. And
True.
they instantly assume that you are successful.
Interesting.
Yeah. So you know what I got? White shoes with clean laces, bro. And I wear them to black tie events. What? Anyway, so as we transition into through Bitcoin and a lot of newer technologies, we got the ability to have decentralized products. We got the ability to disintermediate people, to basically take middlemen, which have not, statistically been good for people, for us. Small elite groups don't have a good history in like all of time of being really good to society. Small elite groups tend to do sketchy stuff that's for the betterment of the small elite group, and they don't really care so much about us. Well, we got the ability through digital assets and decentralized ledgers and blockchain-based ledgers, decentralized protocols, and lattice structures, and all these cool things that kind of spawned from the original Bitcoin thought. We got the ability to disintermediate those little elite groups. We could take middlemen and replace them for middleware, right? And every time you do that, you give more benefit to a buyer and more profit to a seller. And so your marginal product is better on both sides, right? Like you could think of an Uber, for example, that was disintermediated. And I'll give credit where credit is due. This is an example that Mark Novogratz uses, which I'm not a fan of. He's kind of a tool, but occasionally he nails it. You have a decentralized Uber, and instead of a big company full of creeps in the middle telling you when to go where and what and punishing you and all this, you just have it based on software where you have very clean code is law rules that everyone understands. The rider gets a ride that's 15% cheaper. The driver makes 15% more because you don't have that small elite group of D-bags sitting in the middle, suckling up value and profit from both sides. And any business that can get disintermediated will eventually be disintermediated. So that's what Web3, that's the promise of Web3. Now, the nuances of it are a little bit different, and we're not seeing Web3 yet, but we're seeing it start to show its head. And we're seeing where you might go, if that was decentralized, that'd be better. If that voting was done on a blockchain, that would be better. If that one entity, like, Google, didn't have control of all of this data, or Amazon didn't have control of all of this data that we have, we couldn't have a Library of Alexandria event where in like 4 days, a third of human history goes kapoof because, some people with second grade educations and machine guns just tear it all apart. So, we are fallible human creatures. The more we can protect ourselves from ourselves, the better. And disintermediation does that. And so hailed as the next generation of the internet, Web3, and there's a lot of suppositions here, but I'm going to kind of go through some of them, will be sanction resistant and free of data silos, which is important. Think about medical, just medical. How much different would the whole COVID situation have been if it wasn't just GlaxoSmithKline pooling all their data for themselves only? If it wasn't just Moderna pooling all their data for themselves only? What if all the hospitals, all the scientists, all the chemists, all the biological data that was being and pharmaceutical data, and all of this had been pooled in one giant place where anybody could data mine? How much different would this have been? A lot, I think. I think it would be a lot. I think humanity would be materially different if we just one thing, if we just shared medical data, just that. I mean, I don't know. To me, that seems like a big deal, but I guess to other people, it's not so big. Gavin Wood, Dr. Gavin Wood, by the way, co-founder of Ethereum and creator Polkadot and Kusama, coined the term Web3 in 2004. Gavin Wood. So there's a little piece of an interesting factoid. Gavin Wood, co-founder of Polkadot, he was the one who created the term Web3. 5 years later, the Bitcoin white paper was released in 2009. It's actually not quite true. Bitcoin's white paper was released in October of 2008, but we won't fault them for being factually inaccurate, which further cemented the imperative of decentralization. I would say decentralization and disintermediation, right? The decentralization narrative is here to stay, I would say at this point, right? I think now even grandma has heard of Bitcoin, right? She might call it Bitcoin. She might not know exactly what it is, and she might be high as a kite, but she's heard of it, right? And I think it's safe to say that the idea of disintermediating industries is starting to make its way into more common parlance. Like people don't use blockchain to describe everything crypto, right? Even the dummies on the sidelines are getting smarter because it's becoming part of the social discussion. So what is the role of decentralization in innovating an economy, right? So Web3 can offer global digital rails to innovative and independent ideas. The clamor to rein in big tech has propelled the discussion around Web3. I think I can simplify a lot of this. You look at a lot of these big companies and you just say, wow, they have so much power, they've become dangerous. Not only is it too big to fail, they're almost too big that they can't fail, that no amount of regulation is going to solve it because it's past the point of being able to be regulated, if we're being honest. And again, I don't think any of these organizations intended to be bad, intended to be nasty, or trying to do damage. It's just that as you get big, the shape of a big blob in corporate turns into that of a pyramid. Psychopaths tend to rise to the top, and a corporation functions at the level of whatever is best for the shareholder or a small elite group of individuals at the top that are making money like 400,000 times what their employees are making. So corporations tend to behave like psychopaths because that's in their DNA. And there's not no one corporation or individual wants to be bad, and none of the constituent parts are necessarily bad. There's some outlier creeps, but for the most part, every corporation's not Enron, every corporation's not Chase. And yes, I think Chase is awful, but that's not the story for everyone, right? Facebook, people at Meta are not evil people. It's just you have what you have. You try to maximize profits. You have capital inputs and you have labor costs, and you just try to do the best you can. So don't be so quick to paint all these companies as bad. The reality, though, is that when they get big, they just get bad. And so we might want to kind of steal some of that back, take some of that back. And for some things, disintermediation might make a lot of sense. Not for everything, but for some things, right? And so, for instance, Eric's meal last night would not be better if it was blockchain based. I don't think that would solve or alleviate any stress for Eric's lamb and bison meal.
He's still jealous of my meal.
But there may be some logistical scenarios between the table where he ate that apocryphal meal and where the lamb was back when he was alive and happy and getting pet, and where the bison was, whatever noise the bison makes. Do they even make a noise, or do they just kind of like look like big wildebeest? I don't know. But in between there's probably all sorts of ways where logistics could have been improved with some decentralization or some distributed systems. So it's not a fix for everything, but it's a fix for many things. Privacy is necessary for an open society in this electronic age, which obviously makes sense. Like privacy, I think a lot of you can agree that we should be able to maintain some level of privacy, especially in our value units, but also in the things that we do. Maybe everything we do on the internet is not need to be exposed to everybody else. However, if I'm using a service for free that's providing me information for free, I should expect that they're going to derive some benefit from it. And if they are data mining my behavior, I don't have a problem with it. I don't want them to know, for instance, Nick does this, right? Nick looks too much at websites for shoes more than anything else. So much more than anything else. An alarming degree more than anything else. I don't want him to know that. I just want him to know that somebody in LA might look at shoes more than somebody else. I'm okay with that. Let's keep it somewhat obfuscated. So, is decentralization the ultimate goal of Web3? Not really. The ultimate goal of Web3 is the availability of decentralized everything. But really, it's kind of like reducing to decentralized finance mostly, if we're being honest. And so what does Web3 adoption look like? And again, why am I going over this? Because you're going to hear all this stuff over and over, and you're going to hear people butchering Web3 that don't know what they're saying. It's just a cool word. Chamath will be using it in place of disruptors. He's like, I'm a big Web3 guy. I'm Web3 since 1864. Like, bro, you're not, that's 100 years before you were born. Doesn't matter. I was in it. Okay. All right, Chamath. The lofty ideals of ownership and a truly decentralized economy can come to fruition if we create enabling tools and complementary infrastructure capable with Web 2, compatible with Web 2 and Web 3, right? So you can't just jump to this new tech if you can't attach it to the old tech, right? So the idea is Web 3 adoption is still very, very early. I mean, as you know, look at any of these financial products. They're pretty kind of clunky right now. Though a few Web 2 companies have gradually begun migrating to Web 3 and embracing decentralization. Easy to use, enabling services and infrastructure need to be built to ensure the seamless onboarding of users into this Web 3 era. We need cool apps that allow people to do cool stuff with decentralized products. Right now, we're barely touching the surface. I'm starting to see it basically in finance, right? Like, Eric, is there one area of your life where decentralization has actually made a difference? Is there any area?
I don't think so, Nick.
What about yield generation?
Possibly.
Making money on your money.
Yes, I do make money on my money.
I think for me, and again, this isn't like a quiz. There's no right or wrong answer. Although you were correct, sir. You get 50 imaginary points.
Thank you.
I think that finance is probably the only place really. And that leads me to this, something that a buddy of mine, Byron Gilliam, he's a writer for Blockworks, really good. And he's kind of snarky. He's kind of old school, but he wrote a piece. That I thought was worth reading to you guys. And it's not only is it not right, it's not even wrong. Wronger than wrong is the name of his piece. And it's kind of funny. And that gets back into what we were talking about today, this idea of what Web3 is and how maybe the idea that's being kind of pushed around in society is wronger than wrong, okay? Science is this process of proving things wrong. So when physicist Wolfgang Pauli was presented with a paper on the hypothesis, this person presented him with a paper with this very general hypothesis that was done to be too general to be falsifiable, right? And therefore useless to the cause of science. It received Pauli's harshest judgment. He dismissed it as so bad it was not even wrong, right? And so reading from him, I often feel this way when reading about Web3. The promise of Web3 always sounds great, but the descriptions and claims tend to be so woolly and unspecific as to be useless. Successor to the internet, a system of decentralized trust, the future of identity, read, write, own. Cool bumper stickers, bro. None of these are wrong, but only because they're unfalsifiable and vague, which makes them wronger than wrong. So what is Web3? Well, we're still not entirely sure, but the most useful question may actually be, what can you do in Web3? Like I asked Eric. And so far the answer is, you can do DeFi. DeFi, right? And so crypto enthusiasts often cite these charts overlaying the pace of growth and crypto adoption compared to the internet adoption. And it's a good one. And it's similar to what we look like, the Web 1, Web 2, Web 3 kind of transition. And this is a cool way to visualize this stuff, but it's not quite there yet. What we're seeing, I think, if you reduce, is decentralized opportunities that may make the world better when products might get built in the future on these layer ones that we all love. But right now, it's just decentralized financial products. And most of those are spammy dumpster fire projects. For those of you who are either too young like me or too old to remember, here's what life was like in the Web 2 world of all the way back to 1998. Using email at work was increasingly the norm. AOL had 30 million customers paying for emails at home. Yahoo was getting 100 million page views a day. Most people bought books or CDs on Amazon. People bought Beanie Babies at yard sales and on eBay. People were meeting their soulmates on Match.com. By the way, did you know that 4 out of 5 matches on Match.com are not real people? They're placeholders. Did you know that? No,
really? Like bots to make it look good?
Fake.
Wow.
Fake. They pay women. This part's true, and it's kind of they didn't have enough. This sounds bad. I don't want to say it and get and like look like misogynist or whatever. But look,
and don't say it then.
They didn't have a lot of pretty women. Okay, so what they did was they got pretty women to create accounts and just ghosted it. And they just created a bunch of placeholders. So they had really hot placeholders. Okay, It is what it is. I'm sorry. They didn't have a problem with the men because there apparently is no shortage of men for Match.com. But anyway, there you go. You can read about it. Anyway, people were finding their soulmate. I'd love to see the divorce statistics. Everyone was printing out driving directions from map, like you'd look on MapQuest, print it out, go on your little trip with your piece of paper, right? Because we're pre-smartphone by like a decade, right? People were self-medicating with advice from WebMD, whereas now we're all experts in everything in like 4 minutes. You go on Twitter, look at all the Ukraine-Russian war experts that 6 months ago were COVID virology experts. Anyway, crazy, right? Facts and knowing stuff was being outsourced to Ask Jeeves. Did you ever ask Jeeves anything, Eric?
No. No.
Internet usage.
Yes, Google.
Internet usage was common, on its way to pervasive, and none of it took any special skills to know. The thing about Web3, the thing about the world we live in now, and this is where is it does take a lot. This is not easy. Crypto is not easy. Investing in crypto, investing is not easy, right? You get emotionally attached to your investments and things can get nasty. Investing in Web3, which is what we're kind of doing, is very difficult. Picking the winners is very difficult. And this is why I want to reduce your guys' thinking to protocol layers. So if you want to win at Web3, don't try to pick what is going to be the next killer app, this, that, chasing the next trend. Own the infrastructure. Own the money layers. Everything else will come to you. You might not have the 1,000 X's. You might have to settle with a few hundred X's, which I think it would be okay.
Reach.
So, yeah, right. So, what's happening in DeFi? Well, Web3, DeFi is being built in Web3. DeFi is being built on top of infrastructures. So right now, Web3 is wronger than wrong. Let's get to some questions. I want to that can just kind of percolate in your mind, in your brain boxes.
Yeah, I actually I picked up a question from the chat here, and this one's from Thunderstruck. Question, Nick and Eric, if I may. When someone buys an NFT, is he/she the owner of it or a leaser? Thanks. Also, what about Ronin's hack of 625 million?
Well, I'll lightning round this one. A, yes, Thunderstruck, you may. B, when someone buys an NFT, they are the owner of that digital product with a very specific digital address. Now, there may be many copies of that, but you own that one. Yes, you're not the leaser. You can rent an NFT out, and it has been done. There was people renting out Bored Apes to collect the rewards and then gave them back and do all sorts of things. So, yes, you can do that. You can also borrow against and borrow for and all that. Yeah, so, yes, you own it. It's like owning a digital lithograph. And the Ronin hack, it was about $625 million worth of Ethereum. It was hacked. Has to do with one of the companies that works as a backer for Axie Infinity, among others. Yes, the money's gone. Problem is they use centralized exchanges to deposit the Ethereum, which is incredibly stupid, except the two exchanges they used, well, they used Huobi, they used FTX, Brainbuster, and they used Crypto.com, Brainbuster. What do those all have in common? They're all about advertising, zero about functionality. Ads, sponsorships, garbage agreements. Oh, give some dude some money to wear a t-shirt, and zero about use and utility. Zero. Their exchanges are no better than they were. They're no more liquid than they were. Crypto.com was pulling scams years ago, and I'm sure they will continue. FTX, it remains to be seen, but so far they like to spend hundreds of millions of dollars on garbage. Well, the hackers for whatever reason decided to put their money on that specific exchange, which I find a little weird. Or maybe it's just convenient. They didn't put it on Kraken. They didn't put it on KuCoin. They didn't put it in Gate, and they didn't put it on Coinbase. Don't you find that strange? Isn't that
Quite
a little
odd.
strange?
Quite odd.
It is alarming. It's alarming. So they speculate that that's because they bought. There's people that will KYC their accounts and then sell them, so that people can then go through a KYC account, push currency units out, and off you go. So anyway. That's that. Those are the embedded questions to that statement. We are now all thunderstruck and thunderstruck. Did we get struck?
Thunderstruck, man. It's thunderstruck. We got one. Let's do one more.
Let's do some more.
And we'll save the rest for tomorrow. But this is a good one, which maybe we can get into a little bit more tomorrow as well. Eric, not from Northport. Question: I can't send my fetch to Cosmos Station. Was told to connect with dapps.net to solve the problem. I sent all my coins in the wallet. It sent all the coins in the wallet to me, but they are all gone. Am I Sol? And he's not talking about Solana.
Yeah, okay, which is the same thing. You have to take, there's two different kinds of token. There's an Ethereum token, and there's the native token on the Cosmos ecosystem. If you sent the native token directly to a Cosmos Station wallet, it can't accept those tokens. You have to go through a token bridge. You have to convert that token. If you skipped that step, if you didn't convert the token, because it's basically a different token. It might as well be as different as Bitcoin or Ethereum. It's just a different token. So if you did, first of all, always do a small test transaction. Because if you send your whole pile and you haven't done a test transaction, you have a lot of risk. If you sent this to a Cosmos Station address without going through the token bridge, then it's not there. It's gone. It's in hyperspace.
Do you mean it's lost?
I mean, it's probably lost. It's not for sure lost, because Cosmos Station may at some point build some technology, and I would go find the people at Fetch in their Telegram group and ask and say, hey, listen, I sent XYZ. If that's what you did, I sent Ethereum Fetch to a Cosmos Fetch wallet without going through the token bridge. Is there any recourse? Because I'm sure you're not the first. But I would chalk that up as a loss. In your brain, look at it as you just went to crypto university. You learned a tough lesson, but you won't do it again. Listen, I sent like 16 Ethereum into hyperspace one time because there was a bad address on a website for an ICO back in the craziness of 2017. Gone. I don't like to think about those days because that money's gone. You know what?
A lesson you've learned from it, Nick, right? And now you're sharing with us.
Yeah, that's right. I lost 100 grand to save me $1 million. Look, don't do that. Don't do what I did. Don't probably do what Eric did. And don't do anything my poor, insolvent, drunk, strung out on meth grandmother wouldn't do, or Eric or Brandon. And on that note, we will see you tomorrow. Le pieux, le pieux, le pieux, le pieux, le pieux.